everybody, this is Devon Martin, back with another episode of What You Should Know, episode 6. I'm here with Brett Popish. Today we're going to talk a little bit about property taxes, but first I want Brett to introduce himself.
Well, thanks for having me, Devon.
Yes, sir.
Yeah, so Brett Popish, Prosper Mortgage Group. We're a local mortgage broker here in the state of Colorado, and we wanted to talk about property tax because anybody that owns a property got that fun property tax notice in the mail. When did that go out? Back in April? April or May. And those property tax valuations have gone up quite a bit. And so in me talking to my clients, I've kind of figured that there's a lot of people that don't really quite understand, number one, why they went up as much, but also that notice didn't tell you how much your taxes are going to.
Right.
And so I think it's good that we kind of break that down.
Yep, absolutely. I agree. And, you know, like you said, if you own a home, this affects you, so pay attention.
Yep.
Why did property taxes go up like they did?
Well, so one of the main reasons they went up, and kind of the obvious reasons, is our property values in Colorado have skyrocketed. They've gone up for a couple reasons. We have a tremendous amount of demand with not a whole lot of supply, as anybody that bought a home in the last couple of years would know, right? So as property values go up, purchase price amounts go up, that obviously creates a higher property value. The counties need to get their money because those county property taxes go to pay for things like schools and just various things like that. But that's not the only reason taxes went up. And when I hear people say taxes only went up because home values went up, not entirely true.
Okay.
So back in 2020, the election of 2020, there was a ballot measure locally here in Colorado that got voted on to repeal what was called the Gallagher Amendment. So a lot of people don't understand Gallagher, very complex topic. I'm just going to kind of summarize it. But basically what the Gallagher Amendment did, it was put in act back in the early 1980s. And they put caps on residential property tax. So they put caps on how much the property taxes could increase year over year. They also put caps on how much of the total property tax amount between residential and commercial, how much of that could come from residential versus commercial. The problem with that was it kind of put a bigger burden on commercial properties, more so than residential, but the benefit to homeowners was, well, we're going to keep homeownership more affordable. In 2020, the Colorado legislature decided, well, we need to change this up because the counties aren't collecting enough tax revenue and we're not getting enough funding for schools. So they sold it to everybody. They sold it to the entire electorate that we need more money for schools. And in order to do that, we need to repeal Gallagher.
Okay.
Overwhelmingly, Gallagher got repealed in 2020. So now we're seeing the effects of that. So it's kind of a double whammy because we have the increased sales prices or increased home values, along with the fact that there's no Gallagher capping those increases. So now we get what we get today.
That makes sense. And that explains why we had such a massive increase.
Yes.
On like every property.
Well, for example, my personal property, they increased my property value $515,000. And when I went to the county and calculated my taxes, it's an increase of my annual tax rate of about $3,600 a year.
Wow.
An increase of $3,600 a year.
Right. I think we're sitting right around $2,500 increase on ours. Yeah. That's ridiculous.
So it's a lot.
It is. It is. And I mean, hopefully you guys had some luck with the appeals process. Maybe you got that value lowered a little bit. But I think one big thing that a lot of people aren't really aware of is how that's going to affect you moving into next year. With that being said, yes, your mortgage is going to increase because of the increase in taxes. But one of the big things that people are missing, I think, is the escrow deficiency. Would you touch on that?
Yeah, so escrow accounts are, they basically get balanced or recalculated once a year, okay? A lot of people really, prior to the tax increase going up the way it did, homeowners insurance in Colorado also adjusts because of wind, hail, all that fun stuff that we get.
Absolutely.
And so when people get their escrow statement, they're like, wow, my monthly payment went up $200 a month. Why is that? Well, it's because either the taxes or the insurance went up. So the way mortgage companies or the mortgage servicer deals with this is they say, so for example, on insurance, because I'm dealing with that right at the moment, when the insurance renewal comes in, they'll pay it. Even if it's more expensive than what's been escrowed, they'll pay it. And then they'll come back to the homeowner, the borrower, and say, okay, well, your insurance went up X amount, so we need that money back. But then we also have to reconfigure what the minimum amount you have to pay every month into your escrow so that when the insurance comes due next year, there's enough money to pay that. So if you have a shortage in that escrow account, immediately. Let's say you have $1,000 shortage in the escrow account. Well, now you got to make up that $1,000, and you can either pay it in one lump sum, or you can pay it over usually 4 to 6 installments.
Okay.
But if you pay it over the installments, you're going to have the increase to pay that $1,000 amount back that I just kind of put as an example, plus whatever that monthly annual or the monthly increase would be to equal that annual premium.
Wow.
Go to property tax. Okay, so the example I gave on mine, $3,600 a year. That's a $300 a month increase.
Right.
I'm looking at this going, okay, let's cut that in half. Let's say a general homeowner or a normal homeowner in Colorado, their property tax went up $1,500. That's $125 a month.
Right.
Increase.
Yep.
The first 6 months, again, come February of 2024, the mortgage company is going to pay that out to the county assessor or the county treasurer.
Right.
So they're going to pay it out. They're going to come back to us as homeowners and say, okay, we need to increase your escrow payment by, let's say, $125 a month.
Okay.
But also, we paid out an additional X amount, however much that X amount is, so we have to recoup that as well.
Okay.
So it could be feasible that a homeowner could see an increase of maybe as little as $100 a month, maybe as much as $400 or $500 a month.
Wow.
And so right now, I'm telling all my clients, hey, let me calculate your taxes, because unless you're familiar with the county assessor's websites and understand how to read the mill levies and the assessed values, you have no way to calculate those taxes.
Right.
So I'm reaching out to a lot of my clients now saying, hey, let me calculate your taxes for you. Assume you don't get a successful appeal, and start budgeting for that increase. So that when the increase comes in February, you're not panic going, holy cow, my payment just went up $500 a month.
Right.
I can't afford that. Right?
Absolutely. I mean, I feel like that increase is probably going to price most people out of their houses.
It very well could.
Especially people that bought in the last couple of years when they were paying X amount over asking. I feel like $500 will make or break them. And in a situation like this, it's kind of, I'll use a baseball analogy. It's kind of 3 strikes, you're out. You got your property tax increase, you got your escrow deficiency, and like he had touched on, homeowners insurance increasing as well with all the hail, the Marshall fire. Like, that's 3 big events that's going to, take more money out of your pocket.
Right. Now, anybody that bought, let's say, mid-2022 to current, hopefully by the time this comes in, we'll see better interest rates. I say hopefully because nobody knows what interest rates will happen. But if that's the case, if interest rates decline, there could be an opportunity to refinance.
Yep.
But the biggest problem a lot of people are going to have is if they got into a home prior to the interest rates going up, when interest rates were in the 2s and 3s, they're already at the lowest payment they possibly can get, and now they have the increase. So if they're sitting at saying, okay, well, we're kind of barely getting by even with this low payment or the low interest rate, and then you have that gigantic increase because of your escrows, that's going to be a hard pill to swallow.
Oh, 100%.
And that's why I think we need to be, any professional in the business, you, me, anybody in the business, should be reaching out to Colorado homeowners and saying, hey, let me help you kind of prepare so you can budget for this, so you don't get the sticker shock when that escrow analysis comes back to you.
100%. And I know one thing that we're doing is kind of setting money aside so we can do that lump sum. Is that the route that you would recommend most people do if they can, or what are how would you advise to navigate that?
I personally would pay the lump sum shortage up at one time, because you don't want to have the double hit, so to speak, by paying the shortage and then pay what the traditional increase would be. The traditional increase or the normal increase is going to be high enough rather than having to pay back a huge extra amount in a shortage. The thing to understand about an escrow shortage, every servicer is going to be different in the amount of time that they're going to give you to pay that back. I've seen some do 3 months, I've seen some do 4, some do 6, so it just depends on which, what options they'll give. And I think it also depends on the dollar amount of that shortage. But if it were me, I wouldn't want to have a $500 to $600 a month increase if I can avoid it.
Absolutely.
Now, because that's a lot. It's minimum a car payment. Yeah.
So that's all great information for current homeowners. How does that affect homeowners that are getting into the market today?
Well, so I'm glad you asked that, because the homeowners that are looking today, they're, without manually calculating it, no real estate broker, no lender, no website is going to have what the new assessed property values are going to be, the new assessed taxes. Because property taxes are always paid in arrears, and the information we get was from last year. So you really have to rely on the real estate broker and the lender you're working with, if you find a property you like, to have us look up on the county assessor's website and manually calculate what those taxes are going to be. Now, what a lot of people don't understand, the Colorado real estate contract says you can close a transaction one of two ways. You either close off the most recent mill levy and assessment, which is going to be the current assessed value, or you're going to close off of, and I can't remember the exact verbiage, but you're going to close off of the current tax certificate or current tax, just call it current tax certificate.
Yep.
99.99% of the time, we're closing off the most recent mill levy and assessment because we want to make sure that the buyer gets the proper credit from the seller on the taxes owed and things like that. So that means that we have to go in and manually calculate what those taxes are going to be. And what I encourage everybody, it's pretty easy to do, but it's complicated on how to tell you how to do it. Does that make sense?
Absolutely.
So I just encourage any real estate brokers, any buyers out there, if you find a property you're interested in, shoot us the property address, and it takes less than 5 minutes for us to look it up and calculate it and say, okay, here's what the taxes are going to be.
Awesome. So you can basically, by doing that, give them a forecast of what their payment's going to be like next year, regardless of the tax increase.
That's correct.
Perfect.
Yeah, and we do that on purpose because I'm looking at it, we want to put people in homes responsibly. And I don't want to put somebody in a home that all of a sudden 6 months from now they're calling me going, I can't afford this because we weren't aware of what the taxes are. I want to make them fully aware what the taxes are going to be so that when that increase comes, they're like, okay, well, we already knew that.
Yep.
Unlike anybody that's already owned the home, we're all going to get the sticker shock.
Yep, 100%. So just kind of piggyback off that, what about new build properties? Because I know that, especially if it's a dirt start, they don't have an assessed value. So how would you, prepare your client for that sort of increase?
Yeah, and so the builders usually do a pretty good job on this where they'll estimate, 1%, 1.2%. I've seen some a little higher than that. But those are all strictly estimates. Because when you buy a new build, when you close, the property has not been assessed. The only thing that's been assessed is the land, the unimproved land. So for about a year and a half, you're going to have a very low actual property tax rate. But the problem is when it gets assessed, it's going to spike. So what you want to make sure is the lender you're working with is going to be able to use the estimated tax assessment. Now, here's the challenge with that. So what a lot of people don't understand is escrow accounts are highly regulated, meaning the lender can only hold a certain amount of money in those escrow accounts. They can't be overfunded from the federal regulation. So a lot of times we might close a loan with a high estimated amount, but then the servicer might come in and give a refund check back to the borrower because, well, hey, we legally can't hold this. And so I always tell clients, if you get that check, call me. Because I'm going to tell the client, put that check in a savings account and hold it.
Yep.
Because that check you're getting is to pay those estimated taxes, and we don't want to have, again, sticker shock once that comes due.
Yep. And just for those of you that don't quite understand the whole assessment period and stuff like that, that happens every 2 years. So with that being said, if you missed the appeal process this year, can you go at it next year, or do you have to wait a whole year?
You're going to have to wait till they reassess you.
Okay.
So it could be next year. Well, it'll be 2 years from now, usually.
2 years from now?
Yeah.
Perfect.
And real quick, if you did not appeal, you should have.
Yeah, 100%.
So like I was talking to my parents and my mom, they're just kind of older and they're like, I don't want to mess with it. I'm like, do you agree with your tax assessment? Well, no. Well, if you don't appeal it, you agree to it. So
agree.
Please appeal it.
Yeah, 100%. I mean, I think I helped probably 28 families in this neighborhood alone appeal their stuff. And especially with the paired homes up the street, like the values were ridiculous.
Right.
It was mind-blowing.
Yep.
With all that being said, coming up later this year, we're going to have a ballot measure that's actually going to be worded property tax relief. Can you kind of explain a little bit about that?
Yeah, so what the Colorado State Legislature basically is trying to do, it goes into the Colorado Taxpayer Bill of Rights, which is TABOR. So, and I have a bad habit of making a short story long, so let me try to not do that. So TABOR basically says the Colorado budget has to be a balanced budget. Any overage of Colorado income tax has to be refunded back to Colorado taxpayers. Any surplus can't be held in the kitty to do whatever else, right? That's why we had the TABOR refunds last year.
Yep.
Well, politicians across the board, I don't care if it's Democrat or Republican, really have been trying to eliminate Tabor for quite some time. And so what they're doing is, the thing with Tabor though, in order to eliminate it or use it for other means, it has to be voted on because it's part of the Colorado state constitution. It's not something that just can be messed with in general. So they're putting it on the ballot, framing it as property tax relief, to basically saying, if you read the bill, if you read the proposed bill, it basically says we're going to use the Tabor funds for things that we might find necessary. And basically, it's a blank check for the elected officials in the state. But moreover, they're pushing it out as property tax relief, but what they're not telling people, it's only going to affect about the first $40,000 of your assessed value. It's not going to be as big of a property tax relief as what people might think. And so if it gets voted that they can use Tabor for property tax relief, it's actually going to end up being a tax increase overall, because you're not going to get the Tabor refund and your property taxes aren't going to go down as much as you think they're going to go down, ultimately resulting in a property or a tax increase overall.
That makes sense. I think our tax value went up by about 160 grand. So the only 40 grand, that's 25% that I'm getting relief on. So does the bill actually make sense?
It really doesn't. I mean, in the grand scheme of things, when you look at the amount of increase that we had, and when you look at the numbers on what the relief is supposed to be for, or the amount it's supposed to be for, it really is going to be a fraction. It'll be about 25% of whatever that increase was. So you're giving up whatever tax refund you should have gotten from the state Tabor funds in order to get a smaller amount of tax relief. Doesn't make a whole lot of sense. I'm actually going to be doing quite a bit of videos and posts about this as we get closer to the election, trying to get people kind of educated on that, because I think it's important. But what we got to understand is, Gallagher, we're in this position because Gallagher was framed as we need more money for education. I always say, well, where'd the weed money go?
Right.
Because the weed money was supposed to go to education.
Yeah.
Right. So they need more money for education. Let's raise property taxes. Well, now property taxes are too high. We need to get money from somewhere. Well, let's eliminate Tabor and we'll use that, which ultimately, again, results in a tax increase, not a decrease.
Perfect. So I know that might seem like a lot to digest, but if you have questions about your property tax in your specific case, reach out to Brett or I, and we'd be more than happy to help you out. Be sure to follow him on Instagram, bpop80. He puts out tons of content, lots of good knowledge. It doesn't matter if you're a homeowner, home buyer, home seller. It really doesn't matter. We're here to help you guys. You got anything to add?
No, with that, if you need help or if you're curious about what your tax amount is going to go to, we all got the tax assessed, but if you want to know the actual dollars and how that's going to affect you every single month, reach out to Devon, reach out to myself. I'm happy to calculate that out for you and just at the very least get you a number so you can properly budget.
Absolutely, absolutely. I mean, we're in this to help people out, and we want you to be aware. We don't want you to get priced out of your home. Take these steps now. Start preparing yourself so you're not kicking yourself in the future. Yep. With that being said, Brett, thank you very much for coming out.
Thanks for having me.
Great conversation. I'll see you guys next time.
All right. Thanks, everybody.